Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 21st, 2025, and we're diving into Capital One's latest earnings report for the fourth quarter of 2024. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Capital One has released some intriguing numbers this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. Capital One reported a net revenue of $10.2 billion for the fourth quarter of 2024, which is a 2% increase from the previous quarter. John, how does this revenue growth align with their profitability?
Capital One's revenue growth is complemented by an adjusted earnings per share of $3.09, which beats the analyst's forecast of $2.66. This indicates strong profitability, driven by steady growth in their domestic card business and a return to loan growth in their auto segment. The net income for the quarter was $1.1 billion, showcasing their ability to maintain profitability despite increased expenses.
Operational efficiencies and future outlook. Capital One's non-interest expenses have increased by 15% to $6.1 billion. How does this impact their operational efficiency, and what are the future prospects?
The increase in non-interest expenses, particularly in marketing and operating costs, has led to an efficiency ratio of 59.75%. However, their adjusted efficiency ratio is slightly better at 57.64%. Despite these costs, Capital One is focusing on strategic growth, as highlighted by CEO Richard Fairbank's statement about their positioning for the Discover acquisition. This acquisition, pending regulatory and shareholder approvals, could significantly enhance their market position.
Balance sheet and capital position. Turning to the balance sheet, Capital One's Common Equity Tier 1 capital ratio stands at 13.5%. What does this tell us about their capital position?
The CET1 ratio of 13.5% indicates a strong capital position, providing a buffer for potential risks. Their period-end loans increased by $7.5 billion to $327.8 billion, and deposits grew by $9.1 billion to $62.7 billion. This growth in loans and deposits, coupled with a decrease in the interest-bearing deposits rate to 3.45%, suggests a robust financial standing and effective capital management.
Key takeaways. In summary, Capital One has delivered a strong performance in the fourth quarter of 2024 with significant revenue growth and profitability. Their strategic initiatives, including the potential Discover acquisition, position them well for future growth. John, any final thoughts?
Capital One's ability to beat EPS expectations and maintain a strong capital position is commendable. Investors should keep an eye on the Discover acquisition, as it could be a game-changer for the company. Overall, Capital One appears to be on a solid path forward.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Capital One's performance in the comments below.